Good evening, all. Ira Epstein with your metal market wrap-up, and this wrap-up is for a pretty crazy trade day today. It is Tuesday, and we are at the 18th of October, 2022, about 6:20 p.m. Well, we're getting a little rally tonight, but it was nuts today. The stock market up, other markets down hard. Some markets looking at increases or flattening out of interest rates, but above 4%, saying that's not a good sign. And yet corporate earnings keep coming in with surprises, lifting the stock market. Netflix, United Airlines doing better. I can go company after company. All in all, it's looking better so far for the ones reporting. We're still at the beginning of the reporting. There'll be those that fail as well. In the energy markets, we got hit today, but you're still holding $90 a barrel in crude. Natural gas coming down hard. Is it going to crack $6? Seems to be a question. But this is all about metal, so let's go to the metal markets and see what they did. But before we do that, understand that the dollar is no longer at 113. It's sitting here in the 112 area at this point. So when we look at the gold market, keeps slipping down. There's nothing bullish on a weekly chart of just closes. When we come to a daily bar chart, you can see how the market is suddenly just flattened in. So the 650 level is acting as something temporarily as a floor. If that gives ground, it opens up for the next $25 down to the 16 and a quarter zone. What does the market have to take out in order to say maybe it's not going to make that run to the downside? Well, the simplest way is to look at the swing line study. Remember how the swing line study works. You look at a bar chart, and then if you take my full charting course, I teach you how you look at each bar before the current one. And you draw a line to either the high or the low of the current day. There's 5 sets of rules. It looks at outside days, inside days, higher lows, higher high days, 5 different rules that comes with it. To make a long story short, I look at it because it tells me, do I have a pattern that's a trend or a non-trend? In this case, it's a trend. We keep making lower highs. You see the apexes, and we've had lower lows in place. No arguing that. That's basic. Where's the market at in relation to the 18-day average of closes? Well, it's under it. But if you get over it, just get over it, and I'll come back to that chart for you. 1674.30 is that number. The 18-day average is 1678.20. So if you get over it, you negate the downtrend. You might even start a small uptrend if you don't take out the lows of today, Tuesday. And that would then, if you closed over 1678.20, actually throw out a buy signal. Sounds crazy. It could happen that fast. Until that happens, the bears are in control. What might the market fall to if it takes out this 1650 area? Well, the next number, I said 16 and a quarter on the chart action over here, and the Bollinger Band is verifying that, 1622.60. So any further break under this, let's call it just the 1650 zone, could set up a move to the 1622.60. If you take out 1674.30, pull back and say, okay, if we didn't make the lower low under that first, maybe, just maybe, this is where the market wants to put on some short covering or maybe some fresh buying. Could be that. Momentum-wise, why I'm not super excited on the bear side is you're so oversold. Oversold markets don't beget new selling. Embedded markets do. You get your embedded ratings, you have easier times coming down because the algorithms, other traders that recognize this pattern, they'll jump in until the trade is no good. In the gold-silver ratio, well, we saw a peak recently happen up here, but it's not telling me that the market has really lost itself. Silver is still weaker than gold. You see it to a degree. You have the lower highs, lower lows. The word is degree because you're oversold here as well. If this market can clear the Monday high, and that's Monday, at 19, I think that was 1989, if I'm correct. Let's take a look and see if I can get this to move back. And here it is. 1889. If that is taken out, and you don't first take out today's low in the market of 1849, then I can make an argument for the 18-day average to be the next resistance, 1932.60. Is the market begging to be sold? I don't think so, not because it's oversold. In the copper market, we seem to be caught between the Bollinger Bands. Now stop, look, and listen. When you see these bands start going sideways and the market's just hanging at the 18-day average, it becomes a churn in the market. It's something to avoid. Let the market tell us which way it's going to break out. Don't get caught in this because you'll go nuts. Go to your doctor, you're going to need help. You'll think it's breaking out when it comes here, you think it's breaking out when it comes there, and you just don't get follow through. That's one of the functions that happens when you get oversold, narrow bands, and just hugging that 18-day average of closes. In the platinum, no matter how the market tries to break, it doesn't get any follow through by getting under the 18-day average. The trend is down, the bias is up, and momentum is flat. I don't see a thing to do there. And in the palladium, I am still very much bearish. However, now that you got down to the Bollinger Bands and the 100-day average, I think the big money left the short side. Elvis has left the building, and he's traveling somewhere to his private plane, wherever it's at. It doesn't matter if it goes lower. The easy money was taken out. Now it either embeds or you get a reaction. That's the way to look at the market. As for the dollar, it's now choppy time. When I go to my financial video where I'm going to review the stocks, I'm going to share with you, had an epiphany this afternoon as to what I think is going on in the stock market and why it's left behind what interest rates are doing in some of the others. You might want to get over there and take a look at what I'm going to be talking about. But remember right here, one of the things I do in the morning for all my subscribers is at about 5:20 to 5:30 a.m. Central Time, I start recording by going through 40 different charts, all of the futures. At the time I'm recording, they are live. By the time I post them, they're obviously a recording. They're not live, but they're 20 minutes later. And I'm throwing out, I start with telling you, what is the news of the day? Anything happen in Asia, Europe, what reports are coming out in America. Then in this order, we start reviewing all the markets. Now, the interesting part with all the markets is I'm going to walk you through my different studies, how I see them. By the way, this works on your iPhone, Android. So we give you as a subscription with it, we include it, our app, so it'll work there and you can watch it just as it's all coming out and see what's going on. And I record it in such a way it plays pretty well. I have an iPhone 14, as I told you, and that's working out pretty well for me. Love the clarity of it. It works neat. So how do you get this info? It's simple. Go to our website under Market Research. All you need to do, if you don't want to do that, is follow my magic finger up to the top here if you're near your PC, and hit the screen with your cursor. An icon will appear up there. You'll see one appear. Give it a click. You'll be taken right to the area. Can't make it any easier for you. I'm Ira Epstein. See you first thing in the morning.